Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah, you're watching Indian Open. Let's go straight to the headlines. The Monetary Policy Committee minutes suggest that members see some space for further interest rate cuts that need to be timed optimally and opportunistically to maximize impact. US drug regulator revokes the voluntary action initiated status of the Aurobindo pharma plant in Hyderabad days after the letter was issued. Aeroports De Paris will buy 49% stake in GMR Airports for nearly 10,800 crore rupees. GMR Infra will retain 51% stake and management control. And Axis Bank and Max Financial Services enter a confidentiality and exclusivity pact. The private lender will explore the possibility of a long-term strategic partnership with Max Life Insurance Company. Donald Trump is en route to India. The US president will touch down in Ahmedabad today before heading to Agra and then Delhi before leaving tomorrow evening. Well, that's arguably the biggest news in India, but the biggest news around the world has to be the impact of coronavirus. And I think Friday's session, the US markets took cognizance of that. Hitherto, we've seen the market shrug off what was arguably looking like small spots across the world, with the majority in China. But now the world markets are taking cognizance of that. So Europe and US ended lower in Friday's session. And if you look at Asia, across Asian screen, whatever is operational is all correcting. Even the broader markets, the Kospi and the Australian markets, whatever is working in Asia is trading with a tinge of red. And the SGX Nifty, of course, indicates a start which is in the red too. And this shouldn't surprise anybody, to be honest. Now, amongst other things, I mean, I know that we are in the midst of a gush of liquidity, and that will continue to come in. But have equity markets priced all of these risks in? You would argue that probably not. Peter Oppenheimer does the same. He's in a quote that he gave last week. He mentioned, and I quote, that the greater risk is that the impact of the coronavirus on earnings may well be underestimated in current stock prices. He's the global strategist of Goldman Sachs. He's talking about what the world markets are pricing in as far as the coronavirus risk goes. I would guess what he's trying to say is precious little. And therefore, the trade setup today largely is around what's happening around coronavirus. I've already told you what the world markets are doing. So it's a no-brainer that India is very, very unlikely to gain in the wake of a global pullback, not just today, but I would argue that over the course of the next few days, unless the global sentiment improves and improves materially, it's very difficult to make a case for individual markets doing well for themselves. You would probably see the safe haven demand for gold likely to continue. In INR terms, we're already at record highs. On the dollar per troy ounce numbers as well, we are starting to inch up quite dramatically, so do watch out for gold. What is difficult though is what could predict is what could happen to crude prices. Yes, they've started off lower and Brent is substantially lower in trade, but the reason why it's tough to predict is because there are also some near-term supply disruptions with the US sanctions on Russia, issues around Libya and some others. So there are issues around crude supply as well, and therefore difficult to predict. But for now, because of the overhanging impact of coronavirus and the demand issues, crude prices or Brent crude prices and NYMEX both are headed substantially lower, which probably is a bit of a tailwind from an Indian perspective. I think over the course of the next 2 days, aside of all that's happening to world markets and risk assets, all eyes will also be from an India-specific perspective as to anything that's coming out from Donald Trump's visit. Any kind of deal that could be spoken about could also have a material impact on sentiment. I think the White House officials have downplayed any kind of a trade deal possibility, but it's been in the talks, or rather, it's been on the mind of the market for a long time now. So let's wait and watch what happens there. What are the stocks to monitor though in a scenario like this? And mind you, it's a very, very news-heavy day today. A lot of large cap names could likely show some large reactions. So let me try and shortlist a few that I think are the most important ones to monitor in the session today. First up, Aurobindo Pharma. The USFDA has rescinded the VAI status accorded to the company's plant about 3 or 4 days ago. And this implies, therefore, that the November 2019 inspection of Unit 4 is still open. Remember, this is important because the stock rallied double digits, large double-digit gains post this was done. One would reckon that there could be some giving up of those gains in today's session. It will start off lower. The extent, difficult to say. but should start off lower. The other pharma news in focus, and because of a newspaper report, which is a Business Standard, they've reported that the SEBI probe did not confirm any kind of misappropriation of funds worth 42,000 crores. If indeed this is true, then this would remove a very large overhang on Sun Pharma. In all likelihood, the stock could react and react meaningfully if this comes out. In all probability, it could react on the back of this report as well from Business Standard. Brokerages have, in fact, written sales notes and otherwise. Let's wait and watch how Sun Pharma reacts in the session today. GMR Infra should also see a positive reaction. The big deal with Tata's is now off, but Aeroports De Paris is going to buy 49% stake for about 10,780 crore rupees. We'll talk about this on First Word. So again, all of these I won't talk about too much in detail. Watch out, as also the Axis Bank and the Max Financial Services Pact. It was not exactly a deal that the market was anticipating, but still, they've announced that they are exploring a possibility of a long-term strategic partnership with each other, and it could possibly be positive both for Axis as well as Yes Bank. Axis as well as Max Financial, and brokerages have given a very kind view for both of these stocks in the session. So Nomura and UBS have raised targets to 700 rupees per share for Max Financial, and of course I think Morgan Stanley's come out with the note on Axis and raised the target price as well there to 925. So both of those stocks could be in focus in the session today. Lastly, I just want to end trade setup with what came out of the MPC minutes largely, and I think it seemed what the MPC minutes sounded very, very accommodative. If anything, they revealed that there is some more space for a rate cut going ahead, and Shaktikanta Das has said that there is policy space that needs to be timed optimally and opportunistically to maximize impact, which means that despite inflation remaining stubbornly higher the last time that the MPC met, the tone of the meeting largely seemed to indicate that there is space for further rate cuts, which is, well, from somebody who's watching interest rates, this should be viewed positively. Anyways, let's tell you what's lined up on First Word today. Some of the key stocks that I mentioned will be in focus. In a first instance of its kind that I know of, USFDA withdraws the voluntary action initiated status of the Aurobindo Pharma plant. Darshan will explore the implications. Nikki will join in to bring us the Aeroports De France and GMR Airports deal contours. Shefali Malik will then join us to tell us about the long-term strategic partnership between Axis Bank and Max Financial. And I'll wrap up first by taking you through the highlights of Warren Buffett's annual letter to shareholders. The US drug regulator revoked the voluntary action initiated status issued to Aurobindo Pharma's plant in Hyderabad. FDA withdrew the letter just days after it indicated no further regulatory action would be pursued at the facility. Darshan is here to lay out the implications, and Darshan, to my mind, this is an unprecedented development.
Yeah, so not even to your minds. I think I spoke to so many people, they've never heard. I spoke to some GMP experts.
So it's never happened?
It's never happened. Now the only explanation is that it could be an administrative error by the USFDA. So in most cases, I don't think it's Aurobindo's fault to, on Thursday or Wednesday to, come out with a note saying that, I think it was Wednesday, to say that, it's a VAI, because they received the communication from the USFDA. Now what happened over the weekend is that on Saturday, that the USFDA again came back with a letter to them saying that, it was a mistake on our part, and the probe is still open. Now the stock had rallied 20% on the news of that, and a couple of upgrades came in. A lot of brokerages turned positive because they believed that the key overhang was gone. Now the key overhang is back again, because this means that in most cases the 20% that the gain will be given off. I don't want to speculate how much, but I'm just calculating if on a move it moved 20%, it probably will come back to the levels it was, because I think with 14 observations, I think most of the street was anticipating adverse actions. In fact, if you take a look at our our copies on Aurobindo Pharma on Unit 4, it clearly indicated that the 14 observations, some of them were very, very serious, and we also had written a copy on how Aurobindo's US plan is failing because a lot of their plants are coming under the USFDA scanner. Now in this case itself, what the USFDA has said that now you go back again to the March 19th inspection, whatever we said is null and void. So this plant is still under observation. We cannot speculate whether an OAI will come in, which means that the new approvals will not come in. VAI means which they had announced means that approvals will start coming in. Voluntarily the company has to make some bit of changes, and the best case scenario is an NAI, which means it's a total clear, which the analysts are not anticipating. Now only time will say when it is. Usually the FDA takes 90 days post post inspection to come out with an observation, and in most cases, if it comes after 90 days, it means that the impact probably will be adverse. It's almost 120 days for Aurobindo. So and majority of their plants are under the scanner now. So whatever the news obviously is negative, it definitely will fall. And why is this important? It's the injectable plant, so they will be much more thorough with the investigation. 46 pending approvals, so 30% of the total business. Now I just also want to clarify, business does not get affected as of now. So whatever, even if they get an OAI, except for an import alert, even if they get a warning letter, OAI, NAI, VI, whatever, the existing business does not get impacted. So they will be able to sell what it is. The only problem is that the newer approvals won't come in. So the future pipeline which everyone is betting on, that probably won't come in. So I think now today 100% the stock will correct because they had rallied significantly. I don't know how much it will correct, but the news definitely not negative, not only for Auro but for the entire pharma sector now, because the trust obviously will be gone. Now people will blame either it was Auro's fault or USFDA's fault. That no one can speculate. But in case I believe it's an administrative issue by the USFDA. I don't think Auro will make up stuff saying that the USFDA told us. So I think now whenever any kind of inspection results come out, I think people obviously will be concerned while trading with pharma stocks.
Yeah, while trading with pharma stocks for sure. But you would probably believe that this is a one-off, right, Darshan? I mean, USFDA in its wisdom will not continue to make such mistakes, or never done it in the past.
It has never happened. So I think no one even knows why this happened. We are speculating that one of the analyst note, Investec came out with note saying that this could probably be an administrative issue. But no one knows what the truth is.
Yeah. That's true, but interesting. Thanks, Darshan. Just a quick 30-second perspective, Darshan. There is some news report on Sun Pharma as well, because it's a stock that could react. We do not have any confirmation, so let's not dwell too much on it. But if indeed the market takes cognizance of this report, positive for Sun Pharma?
Yeah, so I think there were two things. The headline was misleading. If you look at the headline, they're saying that they found issues with the listing norms. I think that is common with a lot of things. I think the most important, which the market probably will take it negatively, but the most important part is if you read through it, their sources indicated that there was no misappropriation of the 42,000 crores. So that if that is true, then a big overhang goes on Sun Pharma. So that is extremely positive. And if in my judgment, I would read that part as positive rather than the listing, because the listing penalties and all, it happens for a lot of companies, and it's not a big, probably a small monetary fine will come in because of some disclosures that they didn't do. And SEBI does it a lot. A lot of companies are penalized because of non-disclosure norms. But I think the big overhang was this 42,000 crore. If it happens.
Okay. Remember, we do not at BloombergQuint have any confirmation about this, but as Darshan said, if this is indeed the truth, then it's a big positive. Maybe the markets take cognizance of that, and therefore Aurobindo and Sun Pharma could have a chalk and cheese reaction in the session today. Darshan, thanks so much for putting that into perspective. It's a big pharma day. There's also Dr. Reddy's in news, but we'll talk about that a bit later on. The other important piece of news, two or three others. One of them is GMR. Now, Aeroports De Paris has struck a deal with GMR Airports to buy 49% stake in the Indian entity. The deal is valued at about 10,800 crores. Nikki is standing by with the contours of the agreement. Nikki, good morning.
Good morning. Finally, the deal has come through. We're expecting a positive reaction coming on account of that. Remember, Tata GIC deal did not go through because of the regulatory hurdles. But then now again, the deal has come through and looks like it's going to be a positive development for GMR Infra, just on the face of it, looking at the valuation. Basic first, where Aeroports De Paris has agreed to buy in more than 49 or close to 49% stake in the company. With this, GMR Infra will retain 51% and also the management control overall in the airport division, which is a great positive coming in. This deal has been valued, or the 49% stake is for a consideration of around 10,780 odd crore, out of which 9,780 odd crore would be through secondary sale and 1,000 would be fresh equity issuance. To give you more detail about this deal, it's split into two bits, where the first stage will see an amount of around 24.99% being sold in the coming days, and the remaining bit of it, which is 24%, that will have to have a regulatory approval. So that might just take some time to come through, but then nevertheless, if you look at how the valuation has been done for the deal, at 49%, if you look at the implied valuation of 100% for the airport division, then the deal pegs the overall valuation of the company at around 22,000 odd crore. Earnouts are to an extent of around 4,750 odd crore. Remember, these are linked to the performance achievement of the airport division, and post earnouts, or including the earnouts, the valuation of the overall airport division is to an extent of around 26,475 crore. Overall, the main objective of GMR Infra is to deleverage or to bring down the debt. With this, if 100% of the equity consideration of 10,780 odd crore, if that comes through, then the net debt would come down from 25,660 crore to 14,880 crore, which is a great positive given debt has been a concern for GMR Infra. What's ADP rationale behind this is it's expected to be value accretive, but that will take some time. That will happen after 2025, and there will be limited impact on earning per share for next 5 years overall.
Okay, so you mentioned that the Tata deal got
annulled.
Because of the regulatory issues. How does this deal compare to the Tata deal?
Actually, it's sweeter if you look at 2020 financials or the estimated projections that we have right now. If you consider this deal, Tata, GIC and SSG, remember, that happened in March 2019. At that point of time, EBITDA performance of the company wasn't that great, but the net debt level, notably, that was lower because the company has now taken upon expansion. But then giving basic details or the difference between the two deals is, first I'd like to start off with the stake sale. Here, Tata's GIC and SSG, they were picking up stake to an extent of 44%. ADP, it's going to be a 49% stake. Valuations, obviously, the equity valuation of how they valued the company in this last 1 year also changes. Tata valued it to an extent of around 22,000 odd crore, and this ADP has valued the company at 26,475. The airport division rather at 26,475. Clearly, you can see the expansion in base to an extent of around 4,000 odd crore. Value split there, they were getting 7,000 crore secondary market and 1,000 crore issuance. Here also it's 1,000 crore from fresh equity issuance, and 9,780 crore coming in from the secondary sale. So that's the basic detail or difference between the two deals. But if you look at the valuation picture of the companies, this deal seems to be far sweeter than what we saw for Tata, GIC and SSG deal, because the equity value, clearly I highlighted the fact that here you get 4,000 crore or more, the company has been valued higher. The debt number at this point of time stands at around 11,000 odd crore, because of which the enterprise value goes on to 37,504 crore for ADP, and implied the same, you would see the number coming to 33,514 crore. EBITDA, these numbers are projection, 2,541 crore. We've just taken Q3 EBITDA at the run rate of Q4, similar levels, because of which the numbers are coming out at 2,541 odd crore for ADP, because of which EV to EBITDA now in this deal stands at 15 times as compared to 13 times earlier, which Tata saw. But I'd like to highlight one fact. This is, on the face of it, this looks sweeter, but if I go back and compare FY19 financials, it reverses, because FY19 EBITDA performance was lower, but at the same time net debt also was lower, because of which the deal doesn't look as sweet. But if I'm taking FY20 projections, in that case, the deal looks to be much better than what it is.
Yeah, I think the street would want to compare Tata's deal because they did it on the back of FY19 valuations to this current deal based on FY20 valuations, and on that basis alone, maybe this deal leaves a bit is less sweet compared to that one. But anyways, GMR Infra has finally gotten a deal and at a good time, and let's see I would reckon that the stock is positive.
Yeah,
I think very quickly.
Just analysts are just trying to say, even if, the deal is less sweeter, if you look at FY19, irrespective of the argument, the big picture is that the net debt is coming down, which is happening because regulatory hurdles otherwise did not let the deal happen. And now that's going on. That's great positive coming in for GMR Infra. Okay,
we'll watch out for this stock. Nikki, thanks so much for putting that into perspective, and read more about this on our website, BloombergQuint.com. Axis Bank and Max Life are the next set of stocks in focus. The much anticipated announcement didn't quite turn out to be as expected. While both sides have made it clear that they are keen on a long-term strategic partnership, details remain sketchy. Shefali is here for more on this. We expected a bang. It's not exactly a whimper, but not a bang either. How do you analyze this?
Well, first of all, the news that all three, Axis Bank, Max Financial and the subsidiary Max Life, they've entered into an agreement to explore long-term strategic partnership for Axis Bank to, explore some sort of arrangement with Max Life. So that was the news. The expectations were that Axis Bank will buy, buy a stake into Max Life or Max Financial. So that was the news. So that didn't happen. But even this agreement is not is a bit of a positive because it removes the overhang. Because remember, this the partnership between Axis Bank and Max Life is really important because Axis contributes around 55% to the premium of Max Life, via its bank assurance agreement. So it is really important over years from FY89 to now. It has helped Max Life gain market share from 5% to 9%. So it is really important in that sense. So a couple of brokerages have put out a note and a very positive commentary coming in from them. UBS has maintained a buy rating and has raised the target price from 640 to 700 rupees a piece now, and they're saying that it seems that the uncertainty regarding long-term partnership is about to be removed now, and the long-term distribution certainty would be really a positive coming in, and the funds that come in, that will help the promoter to help deleverage. So that will be deleverage, and it will remove the overhang of the pledged shares. So that will be really interesting to look at. Just to add on Thursday, we just interacted with a couple of industry experts, and they pointed out that the direct buying in Max Financial is not apparently allowed by the regulator. So the stake buy might be in Max Life, so that may impact the amount of money that actually comes in the hands of the promoters, Analjeet Singh to specify. So that will be interesting to see how the eventual deal structure comes out to be as and when it happens. So if that's a stake buy. So that'll be interesting to look at. And Nomura has also put out a note on Max Financial. They're maintaining a buy rating, target raised from 550 rupees a piece to 700 rupees a piece now, and they're saying that the agreement should address investor concerns on long-term distribution tie-up. So remember, the bank assurance agreement comes up for renewal in September 21. So at least this raises the hope of something working out till then. And the best arrangement, according to them, would be that Axis subscribes to Max Life's fresh or a secondary issue.
Yeah, I think, and I think one more note spoke about this from an Axis Bank perspective, that they might get stake, and maybe that could be positive as well. But Shefali, thanks so much for putting that into perspective. So, well, that's Shefali Malik talking about the big deal that was anticipated, but an agreement that came about. Nevertheless, brokerage has been positive about that agreement as well. Let's see if Max reacts further. It already had a 9% uptick in Thursday's session, but brokerages are positive. Let's see if there is more in store here. Okay, the last piece on First Word today is about none other than the Oracle of Omaha. He sent his annual letter to Berkshire Hathaway shareholders over the weekend, Saturday, India time, 6:30 p.m. to be precise. While Buffett chose to focus on corporate governance this time around, he did put in words on US equities and the lack of any big acquisitions over the past few years. So let me take you to the 3 or 4 key things that stood out for me in the annual letter, also from somebody who's looking at India equities. So one, the clear preference for equity over debt. I think that was the key thing that Warren Buffett to my mind, came about. He said, and I quote, that what we can say is that if something close to current rates should prevail over the coming decades, which is in the current tax rates and interest rates, and if the corporate tax rates also remain near the low level businesses now enjoy, it is almost certain that equities over time will perform better than long-term fixed rate debt instruments. There's a lot of conversation around whether the debt instruments are better bets as compared to equities. I think Warren Buffett's view out there is very clear, but remember, he thinks very, very long term. However, he mentioned about for himself and Charlie Munger as a combined view that they continue to bet on US equities. He mentions, and I quote again, that anything can happen to stock prices tomorrow. Then he's also said in this that they may actually plummet quite strongly, but the combination of the American tailwind and the compounding wonders will make equities the much better long-term choice. This is again in the annual letter. So, well, the Oracle is clearly betting on equities being the fulcrum of his holdings and what investors could largely or should largely do. Something that he's spoken about a number of times, but he's reiterated out here, which is the task of forecasting interest rates. He says that forecasting interest rates has never been our game, and Charlie and I have no idea what rates will average over the next year or 10 or 30 years. Our perhaps jaundiced view is that the pundits who opine on these subjects reveal by that very behavior, which is of forecasting, far more about themselves than they reveal about the future. And I think this is Warren Buffett's maybe not pet peeve, but something that he keeps on speaking about, that how is it that economists or anybody else can really forecast what will happen to economy or rates at a point of time when the best of minds have failed consistently over the last few years. So this is his 2 bits on rates and how they could go ahead. He, of course, speaks about acquisitions as well in a meaningful way, because he's spoken about how the growth of Berkshire Hathaway over the last few years has happened through acquisitions, naturally so. He mentions that I have concluded that acquisitions are similar to marriage. They start, of course, with a joyful wedding, but then reality tends to diverge from prenuptial expectations. Sometimes, wonderfully, the new union delivers bliss beyond either party's hopes, and in other cases, disillusionment is swift. And I think in some parts the letter, if I'm not wrong, is referred to how Berkshire Hathaway has also had both the pluses and the minuses with these acquisitions. Speaking of acquisitions, CEOs and boards, which was also one dominant theme in the letter, and by the way, all of this, or some of this, is then on our website, BloombergQuint.com, so you should log in and read about that. But he mentions that acquisition proposals remain a particularly vexing problem for board members. The legal orchestration for making deals has been refined and expanded. But I have yet to see a CEO who craves an acquisition being an informed and articulate critic to argue against it. And yes, include me amongst the guilty. And then, of course, there are some fun quotes about what could happen, how he might seek some refuge under some sections if indeed he's caught under the web of fire. Not in as many words, but I'm just making this up based on my recollection of that letter. So it's a very interesting read. Not a single mention of Asia, China, or India in this letter, thus at least the letter that came out. Maybe on May 2nd, when the Berkshire Hathaway annual general meeting comes up, I think there will be questions to him about that, and he'll be sure to answer that. But this was some highlight, or these were some highlights of the letter that I could make out and thought I'd bring it to you because it could be an interesting here. That's all that we have on First Word today, though, but lots more lined up on India Open. We talk about all of these companies, etc., and more, and the current investing climate with experts. So keep in mind, we'll get in market experts to talk about all of this, and we'll also get in a corporate conversation or other conversation on the real estate space a bit later on in the show. But after this break, a full tilt towards the day straight.